Yo.
Hey Chris, how you doing?
Yeah, good man. How are you?
Amazing. Yeah, just looking forward to this live stream.
Yeah,
How's the
absolutely.
week been?
Say again?
How's the week been?
Oh, I've had a bit of a nightmare week. I injured my back at the gym, so I've been in hospital. Yeah.
How could that happen?
I was training on Tuesday and I pulled a muscle badly in my back. And a long story short, Tuesday evening I was being rushed to hospital because I couldn't move. My back was going into this spasm fit. Yes, but it was pretty nasty, to be fair. I was really panicking. I thought I'd slipped a disc, but it turns out it's just muscular. But it's as bad as a muscle pull can get. Possibly I've torn something. I'm not sure. So I'm okay now. I'm much better now. I'm dosed up on tramadols and naproxen, and they've got me on a whole concoction thing.
That is mental. I've pulled a muscle in my back, and you can't stand up from anywhere for a while. I don't think I went as far as you, but I can imagine the pain, man.
Yeah, it was bad.
When could you walk? After how many days?
A couple of days later. I mean, I could get about, but I was having to use the kitchen side and the banister to kind of get about, and I was hobbling around. And then Tuesday night, my partner, she kind of acknowledged how bad it was, and she was like, "Look, we need to get you to hospital." I was like, "No, I'll be fine. You know how us blokes do." And then I had this spasm attack on the Tuesday evening, and long story short, I just couldn't move. And I was in this really horrendous pain. And I just remember through it, I just turned into her and saying, "You need to call an ambulance. This isn't good."
My days. I hope I wasn't managing any trades on Tuesday.
No. I had a pretty quiet week, to be fair. I didn't really take anything until about Thursday, Friday. I probably shouldn't have been trading because I was on a lot of painkillers, but I actually had a really good end to the week.
Yeah, amazing.
Yeah,
what were you pushing in the gym?
I was only warming up, that's the thing. So I was warming up, I had about 60 kilos on the bar. I was just doing some deadlifts, warming up, and it just went, just all of a sudden went. So yeah, it was nothing impressive or anything in particular. So yeah, pretty nasty.
Yeah, no. I can feel the pain, even though it was last week.
I know.
Crazy.
So if I say anything mental today, it's because I'm on painkillers.
Fair enough. I can see the signs already.
How was your week anyway?
My week was good. It was good. Just family time, to be fair. Nice and easy.
Nice. We've got a lot of people in the chat today already. We've got 40 people in the chat. I think the gold title has lured people out. People love trading gold with CTI, don't they?
This is clickbait, by the way, guys. We're just going to talk about psychology. So
yeah. That's a joke, obviously. Very quickly, before we get started, I have just taken a trade, so I'm just going to jump onto the charts and just kind of talk through my reasons behind it, and then we can get stuck into the gold analysis. So for me, I had a really good week, end of the week, and for me, GJ was kind of my preferred pair last week. So I caught a sell here, really nice sell here. We had clear bearish momentum. I was in a bearish 4-hour range. We had a nice kind of pullback, what Diego calls here. We got that free traffic here. So for me, I've got, when I see trend lines being formed, so when I see trend lines being formed like this, okay, that for me, I class, and I'll use Diego's terminology, I class that as free traffic. And the reason why is because this is a really weak structure. Okay, so everyone looks at this structure and says, right, well, it's all positive order flow. We've got higher highs being made, lower high, higher high, lower high. Actually, this is really weak, and the reason why it's weak is because there's no manipulation. Now, if you have trend lines that are formed like this, where lows are being swept before new highs are being created, then it shows that there's manipulation in the marketplace, and manipulation means that there's more money behind it. So when trend lines are created like that, they are actually more difficult for price to break. So when I see trend lines like this, where you've got what we would class as really clear and clean order flow, that for me, I class as free traffic. That for me is an area where I know pretty quickly is going to be swept. So a lot of people would have seen this move on GJ last week, and they would have been looking at this big bullish impulsive move up and been looking at it thinking, right, well, this is clearly going to push higher. For me, I was actually looking at the opposite. We tagged into this order block here. We had a nice lower time frame reversal. I didn't quite get the setup that I needed here, so I was patient. I took my time, and I saw this push down, big impulsive candles, lots of imbalances left behind, and then I got my setup in here. This, for me, created a trap. Okay, again, lots of people will have been looking to buy from here. You can see there was an initial reaction from this zone, but I'm pretty confident that it was going to blow through, which, as you can see, price did. And then this trend line was just all liquidity for me. I could see there was no money in that trend line. I could see that, therefore, it was much more likely that that trend line was going to be swept. And obviously that liquidity low then, which is sat just above the major low there, that for me was a really nice trade. So we got about 4% out of that, really, really lovely position. I did take about 80% off, kind of halfway down, and then the rest I let run. And then I took another short on GJ. Again, similar sort of scenario. So we see this bullish momentum coming into the marketplace. A lot of people look at this and assume that the trend has changed. I know Diego and I will have been guilty of this in the past. You see one kind of bullish push, and you're like, right, well, it's now bullish, so we're gonna buy it. But actually, when you jump up to a higher time frame, you can see pretty clearly that this is just a manipulation, right? And we're not bullish until we get that second move up. That shows us clearly that the momentum has changed. Until that happens, for me, it's just a case of seeing that as a liquidity sweep, and the most probable trade is a sell. And as you can see, we sold all the way down. Not as good of an entry here, but I had a few positions on it, so I ended up taking about 2% out of there as well. Anyway, on to the trade for this week. So right now for GJ, I'm heavily bearish. Okay, I don't see any warning signs that we're going to be going bullish just yet. We had a bearish push here. Then London liquidity came in. We had a nice bullish push, but again, exactly the same setup. All it's done is it's taken liquidity above the Asia highs. I was patient. I waited for my entry to occur. I had good, what I would call liquidity order flow. So what I mean by liquidity order flow is that we haven't just got lows, highs, okay? What I've got within there is I've got manipulations happening. So I've got manipulation there, I've got manipulation there, okay? You can see I've marked them on my charts. So when we get this manipulation happening, it indicates to me that we've got some nice, we've got liquidity being injected into the marketplace. We've got momentum. We've got big players injecting money into the marketplace and taking out liquidity. That for me is, good signs that we're going to be going bearish in this scenario, of course. So really, really simple entry. I waited for my manipulation, which was here. I then waited for an engulfing pattern, which you can see we got here. And I took that trade about 5 minutes ago. So that's a valid position now. We'll keep an eye on it, and we'll jump back on and have a look at it at the end of the session. For me, it's quite a nice entry, 14 pip stop, which is pretty good for GJ. And my profit target will be the bottom of that. I'm expecting this to be a trap. Okay, so we'll mark that on as a trap. Expecting that to be a trap. So my first target will be probably this liquidity level here. Okay, that's where I'll be taking most of my profit out. And then I'll be, holding down and see if I can get some more profit out the bottom. So we'll keep an eye on that throughout the session. I'm looking at this price action now. Nothing in this price action indicates to me that we are bullish. Yes, we've had one bullish push here, but one bullish push doesn't mean we've changed momentum. So it's just a case of watching and waiting now and seeing what it does. Of course, it could push up and do that, which would then confirm the bulls are in control, and I'll trade that accordingly. But my expectation on GJ right now is that we'll at least come down to take that low here, and then we could get some bullish momentum coming into the marketplace. But look, that's expectation. I don't trade on expectation. I trade on what I see. So, really simple trading here. Manipulation of previous highs on the 15-minute chart. Lower time frame entry, lower time frame confirmation, lower time frame liquidity order flow, enter my trade, and see what happens from here. So yeah. So if you wanted to get involved in that, obviously take it at your own risk. It's it's not in a bad position now. Probably a slightly wider stop than I got. We may obviously get some pullbacks going down here, and I'll certainly be looking at adding positions if we do get these kind of liquidity lows swept. and pullbacks, I'll certainly be looking to add positions. But for me now, I need a bit of confirmation. I need some nice impulsive candles coming in, slightly higher time frames. 5-minute chart, impulsive candles coming into the market. If we can get some impulsive candles coming in, then I definitely could be adding to that position. So let's see what happens.
Lovely. Nice one.
Where have you gone? There you are. Did you take any trades last week?
I did actually. I took a couple, so I'm back. it was quite
nice.
Took 2-day trades, 1 swing, 1 loss, 1 win, 1 break even.
Nice.
Different accounts.
Lovely.
Yeah.
Good to be back.
Yeah, I missed it. I'm just looking forward to it. The markets for me right now are just really, really clear. It's just, I'm just basically back. There's nothing. I'm not excited or I'm not like upset. It's just it's back basically.
Yeah, that's it. It's like they say, isn't it? Good trading is often boring. When it's really clear like this, it's the exciting times are when you're getting things wrong and kind of second guessing yourself. I mean, exciting for the wrong reasons, obviously, but when everything's really clear, it's actually relatively boring, and you're quite.
It is. Definitely, when I get excited is when that moment when you have a little light bulb moment when you're journaling and you're reviewing your trades, even though you've done it a million times, something just stands out. You're like, oh, hold on a minute, and you get that tiny little tweak. Comes once every couple of months. That's what I find exciting these days. I can quickly cover what I'm expecting. We can cover gold real quick. I know today's
nice. Well, I think we're going to do that today, aren't we? We're going to go through gold kind of, Diego and I probably have very similar analysis on it right now. But, Diego can go through his kind of Elliott waves analysis. I'll go through my kind of liquidity-based analysis. And then we're just going to have a general chat today about gold, what we think is going to be happening on gold, how it's best to trade gold, whether Diego and I have specific strategies for gold, because I think what people need to remember is gold is a highly traded asset, right? And the assets that are more highly traded are generally more manipulated. So if you look at EU, for example, you get a lot more manipulation on EU. You look at gold, you get an incredible amount of manipulation on gold. And a lot of people trade gold, and gold has to be respected. Okay, gold is a difficult pair to trade. There's no beating around the bush. It is a difficult pair to trade. It will often make moves that seem completely alien. There is a logic to it. There is a pattern to it, and we can talk through that today. But gold is I trade it, but it's like my fringe pair. It's the pair that I only trade when everything is looking absolutely fantastic. For me, I'm like EU, GJ. They're my kind of day-to-day trades. Gold I trade, absolutely when I see a really clear setup. But gold needs to be respected. It's a difficult pair to trade. And if you're new to trading, stick with the major currencies. EU, GJ, UJ, AU. Those are where you want to be starting out. A lot of people now are looking at futures, aren't they? A lot of people are trading futures. And again, futures, if you can't trade EU, you will not be able to trade futures because it's a more technical and complicated market to trade. Simple as that.
100%. Yeah, I'm similar here as well with gold. It's not something I can trade every week like I do with EU. It's just, I don't know. There's traders that trade gold every single day, twice a day, and they smash it. But for me personally, it's good for correlation. It just doesn't work the best with my strategy, unless, like you as well, actually, if it's extremely clear and all the Elliott waves and the patterns, and it's just clear, there's no choppiness and ranginess, then it's an amazing chart to trade. But
definitely. That's the allure, isn't it? Is that when gold moves, it really moves. So you can get in, you can get in some great positions, and you can get a really high RR. The risk to that is the other side of it, is that it can be difficult to get in, and if you are wrong, you can be really, really wrong.
Yeah, 100%. Cool. Let me just cover my charts from last week, and then we'll cover. I think Lawrence was saying, hey Lawrence, I don't trade gold, but just had a look at it, and I had a nice B123 this morning in London. It looks like, and a breaker structure clearing retest. Nice. He's one of the BOT traders. A B123, lovely. So it's got a boomerang and a break and retest structure of Elliott wave 5. What it means. Okay, decent. I'll cover that in a minute. Let me quickly start with where we are at DXY. I'll do DXY in a minute. Let me just look at what was my trade last week? Euro. it's kind of, a lot has changed, but at the time this made sense. But I know what went wrong here. Luckily, fortunately, this is the thing, you need to sort of know what is your A star sort of setup and what is your BC stuff setup. So obviously with this particular trade that I took here, definitely not A star, but I was fully aware of it, and you know, lo and behold, there's a loss. A few reasons why I took a loss here. The main two reasons was I'm on the M5 and there's not 1 day's worth of data. Normally when I've got my pattern with Elliott where it's 1, 2, 3, 4, 5, I need minimum 1 day's worth of data. So that's just one of the things. So that I already knew. Secondly, there's no traffic here as well on the left. So stuff like this is a bit of a warning signal for taking a trade. Well, I kind of anticipated that I was going to take a loss anyway, so I was okay with it. I was expecting this low to get taken out. That was like a 0.67 R loss, because I thought, you know, I was on the M1 M5. I was monitoring price action really early, and I closed it knowing it was about to bust my stop loss. So that was basically that. The full process of that trade was essentially there was a fake out of this trend line, and I was expecting a boomerang of this particular pattern. So you've got 1 tap, 2 tap, and a fake out and a close back in. Take out this major liquidity. I was looking at that, but wasn't meant to be, which is fair enough. So that was a bit of a fair loss. Let me quick look at the H4. 1, 2, 3, 4. And also the other reason why I decided to take a short there was because of this pattern here. Hold on. This incomplete Elliott wave. 1, 2, 3, 4. I was expecting 5 somewhere. So there was a lot of reasons for it to go down. But obviously what I just mentioned will affect the probability. So let me just tidy this up. Hold on. There we go. So obviously with Elliott wave 5, price does tend to complete the whole pattern and do a fake out of the pattern and then go long. Plus this descending smaller pattern was also signifying it was going to go short before the long. Right, so there was many reasons for it to go short, but also many reasons for it to go long. So this is why I would not take this on the main conservative high win rate account, especially with what I mentioned earlier. So anyway, that was a fair loss. That's it. It's done now. The other trade was Kiwi CAD. 2 trades. There was a swing trade with a wider stop. That one basically hit my break even recently, and there was a more of a day trade that I took last week, which triggered me in. There was a lot of reasons for that setup to play out, which it did. I was expecting it to go a lot lower, but it just wasn't meant to be. Well, still a 3.7R, so I'm not really complaining. But what I was expecting was this third tap. We're at this third tap over here. Third tap fake out, close below. It's above liquidity. There was also a QM. I'm not sure if you can see that QM. Left shoulder, head, potential right shoulder. Yeah. Let me zoom in. So yeah, it's basically a right shoulder entry above the liquidity, off the indicator that I used. So this one hit my break even on the swing, but the day trade was pretty good. Fortunately, I came out. I mean, I could have had more. I mean, it did go to 9R, but that's you know, I'm not a fan of not taking profit. I'd prefer just taking profit, bang on the nearest 4R area, and sometimes I might hold 10%, but that's it. Those were my 2 trades. What this is telling me now is my short bias is very likely going to get invalidated, especially because of the no traffic candle, meaning this is going to keep on climbing, and if it's going to take out this high, that's it. This Elliott wave here is definitely confirmed with all that bullish momentum. A break of this Elliott wave 4. I'll draw it for you guys. 1, where we are, 2, 3. It's going to be a new 4 somewhere. And yeah, it's just going to keep on climbing, to be fair, up until this larger pattern that I've got. Is I'm in sync with Kiwi CAD. It's actually very easy to trade. So yeah, this is just going to keep on going along towards this area of liquidity. So that's where I'm at. Has anyone got any questions, or do you want me to cover gold or DXY? Frederick, I don't know you are now active on YouTube.
Welcome, Frederick. Good to have you here. We've got a few new members today, haven't we? Got Boss in the chat as well. Welcome, Boss. Watching from India. Love that. Love that. Good to have you guys here.
Lovely. Cool. Let me cover. I'm just going to cover the technicals. Do you look at fundamentals and reports and all that stuff, Chris?
So I keep an eye on them, definitely. For me, the way I use my fundamentals is that they give me my higher time frame direction. So what I always say about fundamentals and how you should use news is that the fundamentals, people always look at news and they look at the news events themselves. Now, what we've seen quite recently in the markets is that a lot of the fundamental news announcements, they've already been priced in. So, look at EU and you look at gold, they start moving 2 days before the news come out because, they're already priced into the marketplace. What we're expecting to happen, the big players already know is going to happen. So for me, I'm looking at it as a long-term view. Like, we look at the US economy right now, we know that it's getting weaker. Inflation, is in a really treacherous position. We've got terrible interest rates, and ultimately that looks bad for the dollar. If this recession, which is looming, happens and is confirmed, which it looks just around the corner now, ultimately, then we know that's bad for the dollar. So it gives me kind of a higher time frame view. I do have specific strategies, and we covered that last week on how I trade the actual news events themselves. But for me, what news does is it does one or two things. It either grabs liquidity to then continue in the same direction it was already moving in, or it speeds up the chance of the reversal. So if price was going to reverse anyway for whatever reason, the pattern that it prints, it just speeds that pattern up, and you might not get the cleanest of setups, for example, as and when that happens. But the news really, I don't think it changes what, unless there's a really extreme event or really, shocking news. I don't really think the news changes my analysis too much. More often than not, it just confirms what I already had thought. And we can just trade in line with it. So yeah, I definitely keep an eye on it. I like trading the news events. I used to hate them, but I really enjoy trading them now. But yeah, I just see it as it is a volume injection, right? It adds volume to the marketplace, it adds liquidity to the marketplace, and if your analysis is bang on, then it should continue to play out. Where I think it's really helpful for people is understanding on a macro view, what is actually happening in the marketplace. Understanding what's happening with the dollar is really important to understand the direction of your pairs.
100%. And also regarding news, what was the release for CPI last week? Was it positive or negative for the dollar?
I don't think it was too much change from what I remember. So CPI last week. So it was positive. It was positive.
Also, so if it was positive for the DXY, that should mean that gold should push down, right?
On Wednesday, yeah.
Right, it should mean that gold should push down. But I mean, it did push down. It did push down in CPI. Yeah, it fully retraced, and it's just heading towards the technicals that I've personally got, or that you.
Yeah, I think whilst the CPI was positive, the numbers themselves aren't particularly great. They're not in a good position. So whilst it was, it came out at 0.3 and it was forecasted at 0.2, the other CPI metrics, they were unchanged. So CPI month on month and CPI year on year were unchanged. So because they were already quite negative, that's why it had that negative impact on the dollar. And obviously gold is now a safe haven, isn't it? With the dollar depreciating in value, gold is a safe haven that a lot of people will get into and ultimately start trading.
Yeah, 100%. It'll probably remain like that for God knows when, to be fair.
Yeah, agreed.
Literally, even if crypto comes and digital currencies, all that stuff, gold is still going to be top dog, to be fair.
Yeah, agreed.
In terms of the technicals, where we are, let me just get an idea of where we're at. Hold on. Okie dokie. There's a middle pattern here. What I've got as a target at the moment is 2,620. That's what I've got as a short-term target. In terms of the higher time frame, to be fair, I'll be expecting it's going to be it's quite hard to know for now. What I do know and I'm confident in is 2620 is what I'm expecting. I've already got that fib extension there as a potential target. In terms of price right now, it's quite, there's no setup. Yes, there's a potential sell here, but because it's about to complete a boomerang, which is a fake out of Elliott wave 5, 1, 2, 3, 4, 5, doesn't really reverse off the third tap. Most likely there's going to be a fake out towards at least this area. That's what I'm expecting. So I'm actually bullish on gold for now, up until this sort of area, if that makes sense. I mean, in terms of the current price action, there could be a little short forming right now, but nothing that I like to jump in. I think Lawrence pointed out a B123, which is the trend line fake out. This trend line, we've got a fake and a closed back inside. And with the B123, it's essentially just a break of structure and a retest, which is where we are. Break of structure and a retest, most likely towards this potential imbalance. So yeah, nice little trade, but definitely short term for me.
Yeah, it's hard to fight against that momentum, isn't it? Really.
Yeah, there's nothing I can see. I would like to see price drop and take up one of these areas of structure.
Yeah.
And then hop in with the trend towards my main target, which is the 2620 is what I'm expecting. So I can't really find a setup for now. Hold on.
And these are these really tricky market conditions because, often what can happen in this, price can just keep climbing and, traders will try and jump into it and try and catch it. But sometimes in these moves, they're the most difficult to trade because there's just no way to get in with either, a reasonable stop or a safe stop. And sometimes you just have to miss these moves, and it's okay. It's okay to miss these moves from time to time. Clever traders and smart traders will often stay out of this until they get a setup or a pullback, and it's that patience and that discipline to hold fire and wait for your setups to occur. I think most people would agree that it's a difficult buy right now, and there's not really any clear price action to indicate that we're going to be going short either. And why would you want to short in a market like this right now? We've got FOMC this week as well, haven't we?
Nice. Yeah, normally after CPI, but fantastic.
We've got FOMC this week as well, so that's one to watch out for. So yeah, it's definitely a tricky pair to trade.
Yeah, it's not ready. I've just pointed something out. Like for example, this pattern here, there's no complete Elliott waves for me to feel comfortable with trading. So that there's nothing here that I can see. This is just a parallel channel, expecting price to reverse from around this area. But because it's an incomplete pattern, it's not complete, such as with this current ascending wedge. That's more of a complete pattern. But now that I've pointed something out, the thing with gold is just have to wait until it's clear.
Yeah.
So what I'm going to do is I'm just going to extend this trend line towards this significant high, which is in confluence with this structure here. It's quite parallel to it. I'm going to separate this trend line, separate the pattern behind this particular pattern. Bear in mind, this is Elliott wave 3 based off this trend line, and I am expecting, based off this pattern, I'm referring to this larger pattern, this larger one here, right? 1, 2, 3, 4, 5. I'm expecting 5 to be up here at before 2620. But because of this current, what's happened is a new pattern has developed. So this is what's going to take precedence for me. It's the most relevant pattern and very, very clear. So that particular pattern, I'm going to scrap it, separate it, and now focus on this current ascending pattern here, which would suggest that we have 1, 2, 3, 4, and potentially 5 up here as well, wherever that is. I mean, most likely it's going to retest this.
Does that then add a bit of weight to your setups if you've got, you know, 2 patterns that are both in the 5th wave at the same time? Does that kind of add confluence to the fact that this should be a really high probability area for price to reverse from?
Yeah, 100%. But a lot can change when price is near the actual the point of interest.
Yeah.
And it's really important with my strategies, because if price is around this blue zone, I know exactly where the boomerang is going to be at.
Yeah.
But if it starts to range, or just range from around here, that order that I had here now has to be cancelled with an order up here, vertical to that point of interest. So it really depends where prices are at the time, which is very important for me. But from what I can see, that's the current pattern that makes sense. I mean, there's larger pattern. I'm going to separate that as well. I'm just focusing on this pattern now. It's just a missed trade, so just ignore that.
So you wouldn't be trading gold long at all then? You are ultimately just waiting for a short?
No, I would love to jump in a long. In fact, everything's screaming for a long right now. I would love to just look for some clarity. I mean, if it can have a deep pullback, that would be fantastic, because then I have a clearer pattern, right, from around this point of interest. As long as there's a 3rd tap fake out, then I can get involved on the long. Then I'll be focusing on this pattern on the boomerang of that area. So what this means for me is best trade happen here or over here. Now I need another setup right here, but because there's so much momentum, it just needs time to restabilize, or it might just have another push up and there's no longs, but then I am expecting a short. So that's kind of my game plan at the moment. Let me just double check everything. Hold on.
I think that's what FOMC is going to give us, because obviously FOMC, you know, it will put a bit of a whipsaw into the marketplace. I reckon that's what FOMC will give us. It will give us that pullback, you know, really quick pullback with not a huge amount of opportunity to then get into it, unless you're kind of quick on your fingers.
Yeah, that would definitely make sense. Oops, the thing with news, price action becomes so clear just a few hours before. That right now we know that gold is going to push up. Well, what I personally think gold is going to push up, but prior to that, to actually get involved in the actual trade, you know, it's very hard to determine what until just a few hours before the news. So yeah, either a rally up, or I'll be able to catch, if the pattern forms here, a reversal from this area. As long as there's a nice little 3rd tap. There we go. Hold on. When I say 3rd tap, I'm referring to this trend line here. Just for the viewers who don't know. But hold on, let me delete this. This is done. This is done. This is done. We have there we go. 1 tap. We've got 2 taps. So this is a nice little point of interest. If we get an opportunity, that's when you start looking at the lower time frames, you start looking at liquidity, you start doing the hard work, which is looking for these points of interest. But there's no point for me to do that now until price starts to drop and it's near it. But yeah, I mean, now that I've double checked the charts, this looks very, very clean. Very clean for a potential long from around here. And then probably target, same area, 2 point. Definitely, I'm very confident. 2620 minimum. Wait, oh no, that has what? I mean, I need this pattern to confirm, but yeah, 2620 is the bare minimum. Most likely, it will go a lot higher by the looks of it, but that's like a very, very conservative target if I do get involved in a long. And is that new all-time highs?
Yeah, we hit that yesterday.
Okay, it's just going to keep making new all-time highs, so fair enough. But saying that, it looks like, yeah, there'll be a massive short coming. Temporarily though, when I say massive short, I mean just, yeah, a pullback, then probably a continuation. But this pullback is going to be quite significant. That's what I'm expecting.
Yeah.
So that's me. Has anyone got any questions regarding gold? Oh, okay. Does anyone cable? You know. What about cable? Let me do cable. It'll take me a minute, and then you can jump on gold if you want, Chris. Yeah, cool. Cable. Bullish. That's it. Bullish on cable. All these patterns, I'm focusing on the most recent one. So I'm going to separate this one. Separate this one. That one. Go to the left. And by the looks of it, that's a daily. When does FOMC come out? Is it Tuesday or Wednesday?
It's normally Wednesday. So look,
Okay.
yeah, Wednesday, 7 o'clock.
Fair enough. Okay, so what I'm going to do is on Wednesday, this is what I like to do to sort of anticipate the news direction, is I have a vertical line for today, and I just move it 2 days to the right, and then I've got Wednesday. So I'll be expecting price to reverse from around this point of interest. Should be quite accurate, doesn't have to be pinpoint. Then I'll look for the liquidity area to the left. I'm going to look at the liquidity area to the left. I can see there's liquidity area to the left right here.
Yeah,
that's the nearest liquidity. So that is going to be my target for cable, whoever asks. That's my target. And what's that? 134,400. Easy. That will be the boomerang area though. That's where I'll be expecting more or less the fake out. But conservatively, if you want, the target, basically just down here. And you can do some more due diligence and just briefly look at any fair value gaps, imbalances. Okay, look, there's some equal highs here. That's obviously a bit of a magnet. And then you'll be looking at most likely this little imbalance here as a very conservative target. Right there.
Yeah.
And I go back. And there's the target. 134. 134, what is this? 134, let's call it 40, more or less. There you go. That's the target. Boom.
Nice.
Cool. Okay. Yeah. Cool.
Yeah, looks clear, doesn't it?
Yeah, it definitely does. So that means dollar weakness, which makes sense.
Lines up with the fundamentals as well, so it's on.
Perfect. 5%.
We gotta make hay with the sun shining when it's like this, right?
Yeah.
The markets are clear like this, and we got fundamentals in line with us. These are the trades that if you are going full margin, you should go full margin on. Not that we recommend it, but we know that some of you do. But these are the conditions that if you did want to over leverage, these are the sorts of conditions where you would do. Obviously, it's not anything we would recommend, but those of you that are hungry to flip accounts and things like that, market conditions don't get much better than they do at the moment. We got a weak dollar. All the news is leaning towards a weak dollar, and we've got really clean charts opposing that. GU, EU, they're all opposing the weakness of the dollar. And what I mean by that is that they're confirming that analysis, right? The weak dollar means that EU, GU should drop, should increase. Sorry.
Yeah, 100%. I might get involved with the cable when it comes. Actually, I'll be looking at these areas.
Get your alerts. Yeah.
That's for a long soon. Maybe tomorrow or just before FOMC. Nice. Yeah, the market's very clear now. I love it.
Yeah.
Cool. Do you wanna cover gold on
Yeah. I'll jump on. I'll share my screen quickly.
Sweet.
Just a bit of an update on GJ. And if you did take it, we've had a really nice push down over the last kind of 45 minutes or so. So that's kind of confirmed for me my positioning. We've got this trend line liquidity down here now, which, and I'll use this term, it is free traffic. We are just expecting that to continue pushing down. Nothing indicates to me that we're gonna, create any new highs here. But look, we've got a bit of a pullback. The expectation in moments like this, and a lot of people start panicking here, and they start thinking, oh, it's going to reverse on us. But look, the market has various cycles it needs to go through. We've taken liquidity here from these lows, pushed down, had a really confident push down. So, you look at multiple time frames now, we've got bearish price action in higher time frame, bearish momentum. So it's just a case of just being patient now and waiting for that. This was actually a really good trade, really clean trade. It's played out really nicely on the live stream as well, which is what we always like. Those of you who have been, following the live stream trades.
I took out a mistake.
Say again?
I took out your screen by mistake. I was trying to do something.
Oh, did you? Those of you that have been following the live stream trades, we are at 100% win rate so far. Obviously we don't expect. That's not. I wish that was my own stats, but every single trade we've taken on these live streams so far has played out. For me, what I'd be doing now, since we've had that nice push down, is I'll be moving to break even. Put my stop loss at break even now, and it's just a free trade ultimately. It is Monday. Mondays have been better lately, but Monday does have a habit of range of tight. So it's a case of probably securing your profits a little bit sooner than you might do. I've got my first target off down here, which will be 11.5R. Depending on how it moves over the next hour or so, I might take out your profit earlier. So we'll just kind of watch and wait that one and see how it plays out. On to gold. So I'll start from kind of a top down, just to give you a trading stat of what I'm looking at ultimately. So my top down, I always start on the weekly, and I acknowledge what the last weekly candle was. So the last weekly candle was a very clear bullish candle. So I mark that on. That gives me a bit of a bias understanding that if we had a big bullish candle, the likelihood is that the next candle is likely to be bullish as well. Okay. Looking at daily as well, very similar situation. So I've got bullish daily candles. So I'm looking at marking those on. Mark out my weekly highs and my weekly lows. We've actually already taken the weekly high. I don't see that as any significant point. The reason for that is that when you have got a bullish candle and the weekly high is ultimately taken, we're expecting that to happen. So I don't really see any significance of that, other than the fact that it might give us a bit of a pullback. I'm looking for this market to hopefully become efficient. At the moment, it's inefficient. What I mean by that is we've had this big bullish push up, but we haven't yet had any rebalancing. And this is where I could expect that we're going to get this pullback. Now, the point that it would want to rebalance would be the last high of the move that created the break. So this is the break from that high of that weekly candle. That's the break, and all of this now, all of this section of price is inefficient. Okay, it's like a huge imbalance. Price hates being inefficient. Okay, it means that there's unsettled orders. It means that there's too many buy orders that haven't been kind of rebalanced. And so for me now, this becomes ultimately a target. It's what I call my EPA target, which is my efficient price action. So my expectation would be a pullback into this zone. Okay, how far we get down into that, I don't know. It depends on various factors like news, but we'll keep an eye on that. I've got an unsignificant daily level there. The reason why it's insignificant is because there's not really been any kind of pullback here. We've had a big bullish candle, tiny little pullback, another big bullish candle. So definitely an area that we might see some sort of movement on, but it's not an area that I'm particularly fussed about. And if anything, it'll just probably cause like a little pause in the market. We go from there. Looking at my 4 hour, so 4 hours is my main kind of trading range that I use. So I'm looking at my trading ranges, and I can see that I'm very, very high up in this bullish range. I haven't actually got a confirmed range right now. My last confirmed range was here. Okay, so that's my last confirmed range. Until I get a significant pullback, I don't actually know what my range looks like, because if we just do this, then naturally that makes my range high that little bit higher. So I need some sort of significant pullback, lower time frame change in momentum or something like that for me to understand where my range is. So right now I'm overextended, taking out an external liquidity level. I'm inefficient. And so the logical choice for me is that price is going to pull back. Where it's going to pull back to, obviously we don't know that just yet. We just have to wait and see. For me, it's kind of just I'm sitting on my hands and waiting now. You know, I'm not going to be jumping into any trades right now. You know, if this was really clear bearish momentum, so if we had like this sort of structure, then, you know, I definitely could be looking at taking a trade off that. Okay, that would give me some significant price action I could trade off. But ultimately, you know, we've had this really weak bearish movement. That doesn't indicate that to me that we're going short. That actually just indicates to me that we're probably going to be going long. I see that as a complex pullback more than anything else. So, you know, it's really a case of that it needs some sort of development, and you know, I need to see what price is going to do next, and I don't really see what price is going to do next. You know, we're too high up, and the problem with all-time highs is that we don't know how it's going to react. You know, we don't have an area of liquidity that we could sweep and pull back from. We don't have, you know, any previous zones that we can trade off the back of. So we've kind of got to let the marketplace show us what it wants to do next. And, you know, I'm not confident getting to any trades until we've had a significant pullback. So I'll be looking for one or two things. I'll be looking for some clear structure, okay? And I'd want some really clear order flow in the marketplace for me to then get into a trade. You know, possibly over the next couple of days, we could get some sort of liquidity sweep like that. And that for me then would give me, you know, a trade that I could sell short of. You know, I'll be trading that to the nearest liquidity because we are, you know, counter trend, and I have to understand that the market can reverse on me at any stage. What probably is the safer trade is waiting for price to pull back, and once we've had a pullback, is getting into some sort of reversal pattern to trade it back up. Now, one of the things that you have to learn about gold is that it will often rebalance itself, and it can often move into areas that don't really make any sense. What gold has a real habit of doing, if you draw a fib on your most recent range, so let's say that this is our range from the low to the high, what gold has a real habit of doing is pulling back to 50%, okay, and then reversing on us. And this is really, really common on gold. I'll try and show you if I go back. So look at this range here. Okay, perfect example. I trade draw the low to the high. See how it pulled back almost exactly to that 50%, and delete the other fib so you can see clearer. Okay, it's pulled back almost exactly to that 50%, and then it's reversed. If we look down in the market, there was another one the other day as well. Where was it? Remember, because I got caught out the wrong side of it. I think it was in here somewhere. Potentially this one here. Okay, so we had a new bullish range that was printed from here to here. Okay, from here to here. Exactly the same. Yeah, it pulled back into 50% and then started reversing on us. So watch out for gold, because it doesn't always pull back to logical areas. It will often pull back to the 50%. Oh no, it's this one. Sorry, it's this one. So low to the high. Okay, and it pulled back exactly to the 50%, and then it shot off. And just tighten that up, and think it was literally exactly on the 50%. Yeah, you see that? It was exactly that 50%, and then it shot off. So you've got to be really cautious with gold, because it will often do that. And what it does, and where traders get caught out, is it lures you into thinking that it's going to go short. Okay, and then logical thinking tells us, well, we're going to go short, so we're going to pull back into, like, you know, the discount zone of this premium range, so we're going to come all the way down to here, for example. This is exactly why, if you're trading against the momentum of any marketplace, your first profit target should be around 50%, because it doesn't have to retrace any deeper. Normally, the 50% area, so if we look at our EPA here, okay, look at our EPA level, which is there, that big white line, big thick white line. If we draw our range from our low to our high right now, see how that EPA level is often lining up to 50%. So what's happening here at those 50% areas, there's another one there, there's another one there, as you can see. What's happening here at those 50% areas is price is being rebalanced. And when price gets rebalanced like that, that acts as a liquidity. So it acts as a liquidity, and ultimately price can, you know, just move off from there. So, you know, The smart trade would be waiting for the long. The smart trade would be waiting for this pullback into this EPA level and then taking a long from there. Alternatively, if you did get some really nice structure, you potentially could trade short, but just be careful and understand that, if you're taking a short down in here, you're probably not going to get the big move that you're expecting. Probably, with how bullish it is, you're probably going to get a tag of this EPA and then another bullish move up. And that's what I think is going to happen in the news. So we've got, can you see my my news chart there?
The news chart.
Okay, is it just my
It's the trader view.
Just my trader view. Okay, so if those of you check on any of you kind of news calendars, we've got core retail sales tomorrow. We've got FOMC and CPI for GBP. Sorry, so we've got FOMC Wednesday. Thursday, we've got unemployment claims. So it's a really heavy news week. And ultimately, for me, it's just a case that with gold, I would expect higher prices still. And I think one of those news pools is going to give us a really quick move to then just take us bullish. So the way I've been trading it probably is I'll be waiting to see what those news events do, and then seeing maybe if I can get into a pullback like that. One of these pullbacks will hopefully set up, and we can go from there. That's what I'm kind of looking for gold.
Lovely.
It's really helpful because people want to be trading now, don't they?
100%. I mean, we've got the same bias. We're expecting a pullback, and that's fantastic. Cool. Double confluence. Chris and Diego are bullish on gold.
Do you adjust your strategy for gold? Do you trade it any differently? Do you expect things that maybe you wouldn't expect on other pairs?
No, I don't really adjust it to gold. The only thing with gold is just we're trading between compared to euro and the other pairs. Yeah, the same thing.
Diane's asked a really good question. So, any thoughts pre or post US elections market behavior? Okay, so this is a topic that I've been researching quite a lot. Obviously, living in the UK, it's difficult to understand the implications. I would understand what would happen in the UK elections more than the US elections, but the general consensus that I get is if Donald Trump wins, which is looking more and more likely, it's likely to be positive for the dollar. Americans love Donald Trump. The stock market loves Donald Trump, and the big corporate love Donald Trump as well. So it's likely to be positive for the dollar. That being said, because the elections happen over a longer period of time, whether it has any kind of quick reactions or immediate reactions is unknown, but it might just change the macro view of it slightly. It might inject a bit of fuel into the US economy. That's kind of what I'm looking at it. I think if Kamala wins, then it will probably have the opposite effect, and it will continue weakening the dollar. That being said, these elections and the results of the elections will only have a limited impact, is my belief. I think they will have some sort of impact, and probably an impact for a day or two. But then what is ultimately happening with the US economy is going to continue happening. It's not that Donald Trump's going to get in and automatically they're going to get themselves out of this recession that's looming. That recession is coming. There's very few people that don't believe this recession is coming. They can't keep printing money at the rate that they're printing money. The interest rates are too high. The inflation is ridiculous, and the American citizens, much like it is here in the UK, are struggling to pay their bills and live within their means. So the recession is coming, which means stock market will crash, which means house prices will fall, but then that will ultimately inject a load of liquidity into the marketplace. And it's like 2008 with the same thing but bigger. From what happened in 2008, we'll have a big pullback on all of the dollar-based charts, and then ultimately it will continue higher again, and it will always appreciate value over time.
100%. I would always refer back to the technicals. I think even if Trump were to win, if you look at the technicals, there's a lot of bullish move to the upside, but 3 months into the new year, don't be surprised if what Chris says actually comes into fruition and there is a market crash, even if Trump wins. Because the technicals, we've seen it time and time again, every single week, whether it's FOMC, CPI, and all the other massive news events, the technicals is always going to give you the direction, right?
Yeah.
It always goes down to that. If I look at briefly what the S&P is saying, this can kind of tell you who's going to win. That's fair. If I go on a daily, I've got this red line here, the 5th of November, that's when the election is at, right? 5th of November, right? So this, to me, is saying there's going to be a big push to the upside. So, I mean, this is the daily time frame. So what does that mean? Does that mean Trump's going to win, or does it mean that Harris is going to win temporarily, but then it crashes because she will crash the market, right?
Yeah.
So in terms of Elliott waves, which is just magic, 1, 2, 3, it's hovering between, it's going to retest this trend line to confirm a double Elliott wave 3, like it did over here. There's a double Elliott wave 2. Same thing is happening. There's nothing magical happening, but you can see there's going to be a massive pullback next year in 2025. That is for sure. I'll go on the daily now. I'm just adding the Elliott waves. 1, 2, 3, 4, 5. I mean, this could also tell us maybe just a few weeks before November the 5th, everyone's anticipating the release, or they've got the number somehow, and it pushes to the upside only for the big whales and investors to take profit because they know Harris is going to win, and boom, you guessed it. Either way, the technicals are saying if there's a short-term long for a few weeks, few days, and then a massive crash, or it might even just, there might be a news release and it just ranges, and it just takes a while. Nothing happens immediately, like even as big as the news release. I mean, if you look at Bitcoin, there's ETFs, BlackRock's involved. Has it even gone bullish? No, it's taking months. The halving's even done. It takes time for price action and the fundamentals to actually come into fruition sometimes, especially with big news release. Obviously with CPI, you see it the same day, but something like the elections, it could take a while for everything to kick in, That's my perspective. Just follow the technicals.
Fundamentals for your higher time frame direction and technicals. At the end of the day, if you're a day trader, the fundamentals don't really make a huge amount of difference. They don't, because you're getting in and out of the marketplace in the same day. You're trading your setups, and even as a day trader, you should be factoring in the higher time frame direction into your trades regardless. So you don't actually need the fundamentals. It just really assists, I think, in you understanding what the market will look like on a higher time frame view, which can only help, right? But I traded it for a long time without any fundamental real understanding or knowledge, and actively avoided any news days, and I made profit. I passed profit challenges with it. Whether or not the information helps me now, I think it probably does, but I wouldn't say it's absolutely necessary.
Yeah, 100%. I agree, Lawrence. They're trying very hard. I think yesterday there was a second assassination attempt on Trump.
So they say.
Yeah, who knows? It's all a big Truman show, man. It's crazy.
Yeah, that's it. It's interesting. It'll be interesting to see how it plays out. Before we go, guys, we are at 1:30, so we are at the end of our session. Before we go, has anyone got any questions for us? It's great to have so many of you in the chat. What's really lovely to see is that we're getting more and more viewers every single week now, so hopefully we're doing something right. But we are here to help you guys, and we want you to be as interactive as possible. So before we go, has anyone got any questions for us? Does anyone like us to look at any particular charts?
You guys make it makes it fun for other viewers as well. So it's not just me and Chris talking. There's a lot of engagement from the other members. There's Diane, there's Frederick, there's Lawrence, but there's 120 of you watching. So the more people that engages with us, the more value you are going to get as viewers. Whoever asks the question, you're going to resonate with it. So it's in your own interest to engage.
Definitely. And you're going to ask questions that we're possibly not covering as well. You're going to ask the questions of, the people. So we come up with these topics every week, topics that we think are going to help and assist you guys. But we want you to come into the chat and ask us questions as well, to influence how we can, this is your podcast at the end of the day, this is your live stream. We want it to help you guys. That's why we're doing it ultimately. So if anyone's got any questions just before we go, we can answer those. We can do some analysis for you. Just let us know and we'll go from there.
100%. Or even if you've got a request for next week, that could help. Yeah. If you want us to cover a particular subject or topic for next week's live stream, just drop in a title. And we'll see whether we agree with it or not. We may even do it. Most likely we will.
If not, I think we're done for the day, aren't we?
Fair enough, yeah. Looks like it.
Is it? Well, look.
Cool. Wish you good luck, Chris, this week.
Yes, definitely. Let's see how this week plays out. Sometimes these weeks can be great, but they can also be pretty rubbish as well, depending on how the news influence the marketplace. News weeks are usually one of the two, aren't they?
Yep. 100%. I just had an idea. You see, every time we do a live stream, right? Mm-hmm. And we forecast the setup, plays out or it doesn't play out. But it'll be good to have a before and after of every single live stream and get the timestamps, right? The only thing is I don't have that much time to go through the live stream and look for it. I'm guessing you as well. So perhaps whoever is interested, you guys could look for before and afters, get the timestamps for Chris and for myself, and you'll get rewarded with something. I'll probably give you access to the BLT course for free. I'm willing to do that. You guys could do this consistently. Just an idea. Right, message us on Discord if you want.
Cool. An update on GJ taken out for break even. Not sure what's happened because it's a bank holiday in Japan today, so I'm not sure what's happened. It looks like there's been a news event. There was nothing on my calendar today. What calendar did you use? Do you use Forex Factory or do you use something else?
I use
my FX book.
My FX book, yeah. No. I use my FX book. I use FTMO online. They've got like
You're anything at 1:30 today for GBP?
For pound, let me check.
Because it has literally just flown up and taken me out.
Let's analyze that. It'll be interesting to see why, and see maybe it was destined and it's just a good loss or a good break even or whatever, or maybe there was a detour that you could foresee for next time, or maybe my charts might help. I don't know. I love journaling the trades when it randomly goes the other way. I'm like, whoa, what just happened? But then it's something that I missed, and it's probably my fault.
Yeah, I can't see any reason on my news anyway for price to reverse.
Okay, let me check. More prop firms, they've got economic calendar on their dashboard anyway.
30. Yeah, no, nothing.
Tools and services, economic calendar. No.
A New York Empire State Manufacturing Index. I'm not sure how that is.
Nothing that's high volatile.
So again?
Nothing that's of high volatility, to be fair.
Really
all the news are done.
Really strange. That's an interesting one. I'm scratching my head on that as well, because setup was good. No, I got out for break even at the end. It's not the end of the world, but I wanted a nice profit for start our week off. But
can you figure out why it reversed from that area? Oh my days, it's shooting up for you.
Yeah. No, there's no. Yeah, this is why personally I think it's some sort of news. Whether there's something that's like a news release that's happened potentially. That's the only thing I can think right now is that there's been some sort of news release.
There's something called, I don't know, it's hidden on this prop firm's dashboard, but it's like fainted out because it's expired. Right move HPI for the pound, and also that's it.
Right move HPI. Right move.
Yeah.
HPI. Housing price index.
That's what I've got on this dashboard.
Really odd. Really odd. I would hazard a guess though that this is probably just a short-term pullback. So I would ultimately now, to move that across, I'll be ultimately now probably just looking for another setup, if I'm honest. I don't expect this to have changed the market direction from now. It might have done. I'm not going to be quick to jump in on it, but ultimately let's see what it does. What I see now is that we've taken out the liquidity that was sat above all those stops. So that liquidity's been taken, so we can mark that on. And it's just a case of watching and waiting, and possibly we might get another setup from there. So we'll just have to wait and see. We'll just have to wait and see. Straight in though, because that was a lovely little trade. It's playing out really nicely.
Yeah, it was.
Yeah, thanks, Joseph. I did see that US manufacturing, but this is GBP JPY, and if you look at the other pairs, I mean, there's been a bit of a move on EU. Yeah, there's been a bit. To be fair, there has been a bit of a move on the dollar. To be fair, so it could just be that. And obviously that's then impacted USD JPY, which has obviously then hit GBP JPY. So yeah, it could be that move, Joe. You're right. To be fair,
there's on the 8th of August, they grabbed. If you look at the 8th of August, there's a little low there.
What, on DXY?
On pound yen. On H4. So maybe that's just kind of playing out from that. 8th of August on the left.
Yeah.
Could be, but it's just a confluence. I don't know. I can't figure out.
It's an interesting one, definitely. We are the 4-hour candle's about to close anyway, so I would probably, I'd hazard a guess that we're probably just going to get a reversal from here anyway. So let's see what happens. If I can get another setup, I'll post it in the chat, guys. In the live stream, if you're in the Discord server, in the live streams channel, I'll post any updates in there. If I do take another entry, I'll let you know. But I need to wait for this market to play out, and it looks so bullish right now. It doesn't look like it's going to give me a setup. I would prefer a nice kind of sweep of liquidity and an immediate pullback than these kind of multiple printing candles. DXY looks like it's printing some good bullish movement here. So again, this wouldn't indicate to me a reversal. What this is likely to be is a pullback to take out some liquidity. Same analysis as always. Don't be fooled into these candles. This is just one candle out of lots and lots of other candles. Okay, we need structure to confirm reversals. That gives us structure there. This doesn't give us structure. This is just a pullback. The likelihood is that we're probably going to be pulling back to take lower prices. So let's see how it plays out. I wouldn't be trading any reversals right now. I'd just be watching and waiting and seeing how price reacts to this level. A bit of patience now is needed, and see if we can get a bearish setup, or whether we are going to be bullish, and it will give me the momentum to show me that. So let's see. Cool. Well, look, good session today, Diego.
As always, Chris. As always.
Love it, mate. All right, and I will catch you next week, if not sooner.
Sweet on. All right, cool.
Thanks to those of you who reached out in the chat today as well. Thank you. Really appreciate your input. Thank you for all of those of you who viewed. As always, if you're not doing so already, make sure you subscribe to the CTI Discord channel. You're welcome to reach out to Diego and I on Instagram as well. At Strongman4. You have an Instagram, don't you?
Yeah, I got an Instagram.
Yeah, we'll put it in the chat. So put my Instagram, if you want to reach out to us on there. Diego can put his in there as well. Spelled it wrong, that's not a great start, is it? And any questions or queries that you have throughout the week, you can always reach out to us as well. But make sure you subscribe to the CTI Discord channel. Give us a like on this as well. We really appreciate it. The more you interact with our live streams, the more viewers we can get, and we're looking to grow this over the next few months. So it'd be great if you could pop us a like and pop us a comment on the live stream.
Yeah.
Cool.
Strong Money Forex, lovely, and I'm the Smart Wave Trader.
Nice. All right, guys. Well, thank you. We'll catch you next week.
Cool. Take care. Nice to Chris, and good luck, everyone.
See you later, guys. Bye.